You may have noticed in the market over the past couple of weeks, really over the past couple of months, that a lot of stocks have just gone absolutely crazy. Companies with no revenue, with just tons of hope behind them, are doubling, tripling in value. And that's made me really nervous about what's going on in the market. You may notice that in some of my writing on asymmetric investing, some of my videos here on YouTube. So earlier this week, I took action and actually shorted 3 stocks in the market. The way that I do this in the asymmetric portfolio is I buy long-term puts. So these are puts typically in December 2027, so more than 2 years from now. So the advantage of that is I know what I could possibly lose. You can't lose more than the value of the put that you're buying. And the upside potential is that that value can increase as a stock drops. So if the stock drops and if the market drops overall, there's 5x, 10x potential in just those single positions. I have done this before. I did this earlier in the year in Tesla, actually closed that position with a 260% profit. I'd call these special situations in the asymmetric portfolio. But I wanted to go through why I did this, why from a macro perspective, I thought it was time to actually look at taking a short position. I don't want to change the way that I'm fundamentally investing in the asymmetric portfolio. I want to buy and hold stocks long term, but I also want to consider the fact that valuations have gotten extremely stretched and there is a possibility for a big pullback. So hopefully this will be helpful in understanding how I'm investing and how I'm putting what I'm saying into action today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Don't forget to subscribe here on YouTube. And if you're interested in more from me, check out my Asymmetric Investing newsletter. That's where I'm doing more analysis and I'm also building the asymmetric portfolio. And in this case, the special situations portfolio. I tell my premium readers exactly what I'm doing before I do it in both of those portfolios. So that's what I sent out on Monday morning. So let's go through the macro perspective. And if you're interested in reading what these positions actually are, you can find that on the newsletter. But this is a look at what went out to investors on Monday morning. This is the special situation portfolio. As I talked about, I seeded this portfolio with just $500. So what I'm doing here is I'm building this small portfolio alongside the asymmetric portfolio. I started these both from zero because I want to show how you can build wealth over time with relatively little money. That initial position that I had, like I said, sold for a 260% gain with Tesla. So right now that portfolio has about $1,800 in it. And what I'm doing here is I'm effectively hedging the portfolio and taking some short positions in a few stocks that I think have a lot of potential to drop. And there's some big reasons for that. One of those is the macro risk. So there's the economic risk. I just talked here a little bit about the Fed funds rate. There's been a lot of discussion about should the Fed cut interest rates. Look, the Fed is cutting interest rates and that's telling you that the economy is weak. If the economy is weak, that means that we may go into a recession. If we go into a recession, then stocks are extremely highly valued and could drop precipitously. So with a combination of, hey, if we cut rates and you have a combination of very, very high valuations, we could see the market fall 50% just to get these valuations. This is the NASDAQ 100 back to kind of a normal level, 2021 times earnings. We've also seen a ton of speculation, and I use AST Space Mobile as the example here, but you could go through a dozen stocks or so, no revenue companies or companies with very, very little revenue burning through cash, and their valuations have just shot up over the past couple of months. There's actually a few of those in the asymmetric portfolio. But I don't want to sell those stocks just based on valuation. So if I like a company's long-term future, I don't want to sell it just because the stock has gone up a certain amount. But there are companies that I think are much weaker than anything I own in the asymmetric portfolio that I think it's a good opportunity to potentially take a short position via those long-term puts. So again, these are relatively small positions. I put about 2 or 3% of the portfolio value, the asymmetric portfolio value, into the positions that I added on Monday. It was not everything in the special situations portfolio, but I'm hedging what may be an overall overvalued market. I'm hedging against a worsening economy, hedging against portions of the portfolio that may be overvalued. There are stocks in the asymmetric portfolio that have gone to kind of crazy valuations, very, very high price to sales multiples. Very possible that those fall. I'd use those likely as an opportunity to buy more, but I want to have some sort of hedge in case that happens. And I think there could be big negative impacts from things like artificial intelligence. So you may have noticed recently that people who don't have work right now, either because they took a buyout or they got laid off, having a harder time finding work. That's potentially the impact of artificial intelligence at work there. There's also the possibility that the AI bubble bursts. Why is the market trading for elevated levels right now? Because there's a lot of speculation that AI is going to drive some sort of future value. We haven't actually seen that in most companies yet, but that doesn't mean that those valuations haven't risen. So it reminds me a little bit of the dot-com bubble and a little bit of the speculation that we had prior to the Great Recession. So a lot of potential downside. And that's what I'm trying to create, an opportunity where I can have asymmetric returns if there is downside in the market. Like I said, if you want to know what those positions are, I will put a link in the show notes to the actual article, and that's available to all premium subscribers. And like I said, every single month, including next month, the first of the month, I'm going to be buying more stocks for the asymmetric portfolio from that asymmetric universe. These are the stocks that I have covered with what I call spotlight articles. So I'm going to continue adding to that portfolio as I let these short positions play out. And we've got a couple of years for the market to potentially pull back. So not a short-term trade, but it is a trade that is a little bit different than I typically have in the asymmetric portfolio. Hopefully that's helpful in understanding how I'm positioning the portfolio overall for a potential pullback in the market. I want to have a little bit of upside, and this is what I have initially put on. If the market goes higher and we get even more speculative bubble, could add to that short position in that special situations portfolio. But let me know if you have any questions or thoughts in the comment section below. Subscribe here on YouTube if you want more from me. And obviously check out the newsletter as well. Love to have you as part of that community. Thanks for watching, everybody. We'll see you here next time.